Welcome to the Real Estate Investing Podcast, where we help you unlock your potential freedom through land investing, real estate investing, and entrepreneurship. Hey everyone, this is episode 127 of the Real Estate Investing Podcast, discussing the advantages of buying and holding land as a long-term investment. I'm your host, Daniel Apke, joined again by my brother and business partner, Ron Apke. Before we get into the show, let's go over a question from one of our featured Discord members. Today's question is from Graham. Graham asked, I currently have a property up on a flat rate MLS broker. The agent is getting leads, but is not responding, and I feel like this should have sold at this price already. What should I do, and what are my options to get out of this?
So if it's a flat rate broker, you're not under contract to, they should just be forwarding you leads. Essentially, that's what a flat rate broker is. They're not representing you. They are acting as someone who posts on the MLS. They're gonna not handle the leads, but they're gonna forward them to you. I don't know if you have to reach out on a daily basis and ask them for leads or what. Something is obviously slipping through the cracks on there. There are a lot of these companies out there that do this, and I think that's one of the biggest issues with flat rate brokers is having the trust in them to actually get you the leads. So yeah, as far as going forward, I would just reach out to them almost daily and just ask them like, any leads today? Do we get any leads today for this one? And then maybe they'll get annoyed where they actually do start sending you them without you reaching out every day. But yeah, it's definitely not a good situation because you're losing potential buyers in a tough market.
Yeah, good explanation, Ron. Well, other than that, let's get into the show. Today's topic, investing in land for a long-term hold, long-term investment. And I don't think we talk much about this, Ron, simply because most people coming to us and listening are people looking for more immediate wealth and more immediate freedom, and that's kind of what we sell. But land could be extremely good long-term assets to hold, Ron. We have one right now. I'm sure I'm going to have more coming up shortly and soon, but it's not going to make you millions immediately, but as like when you compare asset classes with houses and you know the stock market and crypto and all these other things, land is a really good asset class in real estate to hold.
Yeah, I mean, if you're knowledgeable about land and you're weighing the option between land and like stock markets, if you're knowledgeable in land and you understand areas, like I think land over the next 30 years is going to do better than the S&P 500. Um, at minimum, I think it's going to do way, way better. I just think the amount of land is decreasing. If you can buy, if you have $50,000 or not 50,000, $200,000 you're trying to invest long term and you're deciding on the S&P 500 or a piece of land, like the value of land, I think over these next 10, 15 years is going to skyrocket in the correct areas. Because rural America is going to become less rural, in my opinion. It just has to because people are spreading out of cities. You see these cities that were tiny little cities that are turning like real cities now. And I think it's just going to keep expanding outside of like the giants. Outside of Atlanta, you see these other small cities 150 miles away from Atlanta that are becoming real cities now. So I love it for a long-term hold, Dan.
Yeah, and as population continues to increase in America, which it still is. I know there's a big debate on this, but it's still increasing. It has increased for a long, long time in terms of the population from letting immigrants in. I know people are having less babies than ever, Run, but as population increases in the U.S. from immigrants coming in, which it should continue to, if you believe in our country and our society, it's only going to increase with population, I would imagine, because there's a scarce amount, obviously. But let's talk about the first topic I wanted to discuss, Ron, is the advantages of land. We're going to talk about the advantages first and then some disadvantages. And we can compare this to whatever, like the general stock market, general real estate, just other alternative investments, Ron. And the first thing that comes to my mind is it is extremely safe and extremely simple to do. If you're just talking about raw land, Ron, there's not a lot of work. The taxes are low, and it is very safe long-term investment.
Yeah, it's not like you have to do anything with it. It'll sit there. It's going to be land 30 years from now, 40 years from now. Nothing's going to really change unless, I mean, some areas things can happen, obviously, at land, whether it's a fire or something, a flood, someone does something to it. But more than likely, that land is just going to be the same thing 40 years from now, where other investments, long-term investments, if it's a house or something like that, you need to constantly upkeep. the minimal upkeep, minimal to no upkeep on land is what really kind of entices me long term. And uh, yeah, I love it for that, Dan. I just think you don't have to do much. You do need to be educated, I think, without a doubt, but you just don't need to do that much over the 30 years you're holding or whatever it is.
Yeah, exactly. So you kind of touched on the no maintenance aspect of it. There are ways to cash flow from land. It's not going to be always the most lucrative cash flow, but if you do want to break even and make a little money, there are ways to cash flow. I do have that in here as an advantage to land, because that cash flow is typically much, much less maintenance as well than typical rental properties. When you talk about like farming leases, Ron, or hunting leases, like you still don't really need to maintain the property in a lot of ways like you would with a rental property, Ron. So the reasons I have, Ron, the safety was my number one. Diversification, though, that is a really big one, as especially as you guys start to gain more and more freedom and wealth in your guys' life. Like the diversification to go away from the stock market, to go away from the general asset class of real estate in terms of structures. It's just to go away from crypto. It's just another portfolio, another asset class you can invest in. So diversification as you build up your wealth becomes more and more important.
Yeah, and I think so you have like that land, if you're actively land flipping like we teach, like we do, that is like your income. That's your working income. Whether you're flipping houses, flipping land, whatever it is, working a 9 to 5, making $150,000, whatever that is your active income. Okay. Even if you're flipping land, like I said, that's your active income, but it's not a long-term hold. You're not building that long-term equity with that. So with using 20, 30, $40,000 on 5, 10 acres in a growing area, that's going to be that long-term hold. That's going to be that diversification. That can be for generations way beyond you too. Like that 10 acres is not going to stop going up in value for as long as this earth is around, in my opinion. Like it's just going to keep on going. There will be dips, slight dips, but over 20-year periods, it's going to never decrease in value, almost always, Dan. Like I just don't see it going down in value.
And the biggest thing we haven't really talked about, Ron, is the low taxes. I mean, it's extremely cheap to hold long term. It's not like a rental property where you have 5, 10, $20,000, depending on the size of it, obviously, of taxes every year. I mean, we're talking sometimes in $50, $100 a year, $500 a year. It is extremely low tax to maintain, especially if you're going to cash flow a little bit and lease it out or whatever you decide to do with it, or just let it sit. It's very, very inexpensive to hold long term. That's a huge benefit of mine.
Yeah. And I think kind of the negative aspect is of it is you are, unless you're doing something with the land, like if you're comparing it to like an S&P 500 or a stock or something like that, there is cost to it every single year. Like Daniel said, you can cash flow from it if you lease it out for hunting or something like that. But going on the negative side of it, even if it's only 50, 100, $200 a year, there is going to be a cost to it every single year with the taxes. Yes, it's low, but it is something that is going to be charged to you every year if you want to hold the land.
Exactly. And that kind of leaves us to the disadvantages. So we just talked about the advantages, Ron. Let's get into the disadvantages. And you just brought up the first one that comes to mind. There is a cost and there is a little bit of maintenance. You got to pay the tax. Although the maintenance is very, very, very low, it's still higher than a stock market and S&P 500 index fund, Ron. So that's a little bit of work. I mean, it's not a ton, but it is ongoing money. I mean, if you talk about, say, your property runs $100,000 and you pay $1,000, that's 1% of your appreciation. So you have to factor that in to your long-term asset goals, is that tax, and figure out what they're actually taxing you and figure out what that's cutting from your equity profit every single year. And you got to look at it. You got to look at multiple ways, Ron.
Yeah, for sure. And I think that's kind of, I think that's the only real negative that I can think of. I don't know if you had anything else, Daniel, that you're thinking of in terms of negatives of holding land as an asset. It's not going to have like, I mean, I guess it can. I was kind of going to say it's not going to have like a crazy, there's not a potential for a crazy spike, but there really is. Like if a giant company comes to an area, you're going to have the possibility of a giant 50% increase in your land. But generally, it's going to be a pretty consistent, whatever it is, 10% per year over 20 years or something like that, I think. But yeah, those taxes, something definitely know your taxes, know the taxes for the price you before you bought it. And then you also want to talk to the tax assessor and talk about like, I'm buying this property for $50,000. What are my taxes going to be looking like for next year? Because it's going to be reassessed more times than not.
Yeah, that depends the county by county. Sometimes they don't go off what it's purchased for; they go by appraisal value of what they appraise it as. So you just got to talk to the tax assessor's office for that. But the other thing, Ron, I had is we did talk about there are ways to cash flow, but it's harder to cash flow. You're not gonna, net 20 grand a month from land unless you do something crazy with, renting it out to RVs or campers or something like that. That's going to be a ton of maintenance. So there's give and take for every business model. Like, yes, you're going to get probably a better long-term return than the stock market, Ron. But like we said, there's a little bit of maintenance to it as well. So it's give take. Everything has a give take, I feel like, Ron, and less cash flow, but more equity long term is one of the ones I see.
Yeah, for sure. The cash flow is minimal at best. You can break even, get your taxes cut out, have a hunting lease. It matters if you're planning on. That's the great thing about it, though, Dan, is like you can use this. If you're
Yeah.
renting an apartment building out and you're cash flowing a lot of money, you have all your units rented. Like you can't use that apartment building for anything. Where this land, like you're paying $50, $100, $200 a year in taxes. You can go hunt on it. You can go RV. You can bring your family and camp on it. If there's a creek, like you can go enjoy the creek, just enjoy the outdoors. So that is a huge advantage. And that's not like a cheap thing to do to go on land. And like you have your own land, you have your own private, whatever it is, 5, 10, 15, 20 acres. And you can use it as much as you want or as little as you want.
Exactly. And I just had a thought that I was thinking of when you said that, Ron. Now I lost my train of thought, but yeah, no, the less cash flow, Ron. For the main disadvantages we talked about is just it's harder to cash flow and it's not as great of a return as obviously land flipping. Like Ron said, I do want to reiterate that Ron mentioned how you have a primary income. So you have to just look at this as diversification. This is another place where you're putting your extra funds. Don't look at this as you're going to make a million quick dollars. And I just want to restate that. But Ron, before we get into the next segment, I do want to just take a quick break and ask if you guys have not already reviewed our Apple podcast, please leave us a review. It really helps drive our mission forward and keep these completely ad free, other than me talking now, Ron. But let's talk about ways to acquire, Ron. So obviously what we teach off market sending blind offers. But you don't need to acquire under market land. And if you're holding this for 20 years, buying it cheap isn't necessarily, I mean, yes, it will help, but it's not a necessity. You can make great investments on the market with this. So I wanted to talk about the differences there, Ron.
Yeah, I mean, I think you can definitely if you find like if you're an active land flipper and you find that deal like for us it was that deal that was 40, 50 miles away from us, hour 10 minutes or so. And it just made a lot of sense for hunting land. It was 40 acres. And we acquired it the same way we acquire all of our deals. We actually partnered on someone with it, but it could have been a partnership where we flipped. Like we had the opportunity to flip that land. And if you run into a deal like that, you're like, this is perfect. It's $50,000. I have $50,000 in my 401k. I can put towards this. And that is the thing. I don't want to get too much into that tax implication stuff with like retirement accounts, but you can do that. And it just makes sense if you're setting blind offers and it makes sense. You get a deal back. Awesome. I think you can do that. Hold it long term. Get it in a different LLC than what you use for flipping. But like Daniel said, on the market, if you have cash, you can make and lowball cash offers to people and get good deals right now. You can get instant equity if you have cash, if you can make quick closes, if you can do your due diligence fast and make these offers really intriguing to the sellers. That's what you need to do if you're trying to buy on market. And you can get it at probably 80, 75 to 80% of what it's worth, probably, Dan.
Oh, easily, I would imagine. I see deals. I mean, if you go in with cash, like Ron's saying, if you go in with cash in good terms, land financing isn't like an FHA loan or conventional loan. They're not that secure. I mean, I just closed a conventional loan round in less than 30 days, pretty securely. I had a pre-approval and everything. It went really smoothly. But for land, we see a lot of these financing fall through because they're alternative ways to finance. There's not all these big banks that are doing land financing. And I think that's a big thing to note. So if you go in cheap with an enticing cash offer, you can get things 60, 70, 80% all day long. So just find the land you want and make 10, 20 offers on different pieces, Ron. I'm guarantee you'll get some deals back. But I did want to get into, so we talked about ways to acquire a bit. We touched on that, but I do want to get into what to look at before buying, what to analyze, because this is different than just flipping. You're not looking at the market now, you're looking more at the future market. Um, so there's multiple things to look at here, but you want to choose markets obviously that are growing or you see potential in, or that are very stable, have been around a long time. You don't need to hit a jackpot. You don't need to hit a Nashville, Tennessee 25 years ago. Outside that, it's probably more than likely not going to happen. But if you keep buying land over and over again, you can pick one market and really focus in that one market if you really believe in it, or you can scatter out through other markets and diversify even further with your land. And I think that's the thing to look at, Ron. So there's growing markets, and you can look at things like the appreciation history. Are houses being built in that area? Are there no houses in that area? Do you see like buildings, new builds going up in that area, starting to surround it, and you know it's coming? Are there attractions like a nearby city that's growing, a lake, a mountain? You know, if you're by a big time Lake Tahoe, I can tell you right now that attraction is not going anywhere ever. Like, that is a beautiful lake. That it's not like that lake's just going to disappear right now. So there's things like that to look at, Ron.
Yeah, for sure. I think personally staying in your area because you know the locations, not necessarily staying in your little 10-mile radius, but staying in your 150-mile radius, like you know the small little towns that are growing, stuff like that. Then you can get rural land, 20 acres for $100,000, something like that, when it's worth 120 right now, and then 20 years down the line it might be worth 350, something like that. So I think that would be that is my strategy if when I'm diversifying with long-term land holds, is finding things in my area because I understand the area, I understand where things are happening, I understand the desirability of things. That's where I would personally start because I think you have an advantage on outside investors.
Yeah, I agree. And that's what we say about real estate too. It's a good place to start for sure. Um, Yeah, I don't have much more to add, Ron. There's a lot we added here. I mean, it's hard. This is a hard thing to do. It's We're telling other land flippers who are making a lot of money to take that money and not put it into a flip necessarily to make that 40,000, 85,000. It's hard to do, but you have to understand the sustainability and you have to understand the vision. If all things go south, if anything happened to your business or your family, this is something you can fall back on. It's diversification. So you can look at it as a secure long-term play. In 20 years, it's going to be that $100,000 piece of land might be worth $500,000. Don't look at it every month, what the market's looking like. Touch on it every 1 year or 2 year. You got to look at this with a long-term lens, Ron.
100%. I really do. Like it's not the same thing as looking at like what can I flip it for right now and make it like it's like one, it's going to be taxed different 10 years ago than it will be now if you flip it. Two, it's having that long term, like you put $50,000 into it right now or you buy it for $50,000, it's going to obviously be worth at least $50,000 right now. So you have $50,000 basically you can take out at any time when you sell it. But ideally that turns into 100, 150, 200, just like it is a security blanket. It's going to make you feel good at night. Like when we bought that, Daniel, because a lot of this stuff we're doing is so fast, quick pace, flipping, buying land. There's some risk to it, obviously, that we're doing on a day-to-day basis. But like having that piece of land that I know it's already worth double what we bought it for. And this is 8 months down the line, 6 months down the line, whatever it is. Having that security blanket it helps a lot.
Yeah, and then next year, a year or two from now, it's going to be worth, you know, $50,000 more than what it is now. So just seeing that it's fulfilling to kind of think of, and it is a safety net, Ron. At the end of the day, that's how I see it. It's a long term safety net. Just like I said, spreading out your wealth and putting it in different buckets and not focusing on one. But other than that, Ron and everybody, thank you as always for joining. If you guys have not, please leave us a review on Apple Podcast. Really, really helps this business grow. We appreciate it, and it helps us spread this mission ad free. Other than that, thank you for joining, and we'll see you guys next episode.
Thanks, guys.